What's going on, goats? Welcome back to BooKoo Bucks. My name is Raymo, and today I'll be breaking down my trade on gold futures from this morning. First, let's go ahead and take a look at the execution, and now let's go ahead and break down the analysis. So, ultimately, for gold, if you guys have been watching it, price has been very, very bullish. We're at all time highs. So, basically, I am continuing to maintain a bullish bias until price tells me something different. Also, noticing that we're at all time highs, there is really nothing left to look at, so I'm simply just looking at price action for what it is showing me in the moment, meaning if the lower time frame is still showing bullish price action, I am simply going to follow that bias for my intraday setups. So simply put, since price was very bullish, I was looking for potential shorts. These shorts in my head were going to be simple retracements since price has been heavily bullish. But right here on the 15-minute time frame, we can see price gives a valid pullback here, and then price actually breaks underneath this low here. So when I seen price gave me a new lower low, I thought potentially this could be a break of structure to go lower. Again, seeing the break of structure, um, in my head at least, was simply just going to be a retracement because once again the higher time frame has been heavily bullish. So if I do find short opportunities, I will not hold for very long. Also going down to the 5 minute, this is basically the exact same structure of points here. This right here is just sideways movement. Price doesn't really give a valid pullback of any sort. But either way, we can still see how price breaks underneath this low. So at this point, what I did was seeing that price made a new lower low here. All I simply did was I went ahead and pulled out my fib from swing high to swing low and was waiting for price to pull back up into premium before looking for shorts. At the time, to be honest, I actually had this order block right here as the extreme order block and was looking for shorts out of here. At the same time, before price push on up, I was noticing a lot of buy sell liquidity, which was a good sign of potentially price coming up to take out buy sell liquidity, tap into the extreme order block, and then look for shorts. But if you notice, once price came above here, price simply tapped the 50%. Technically, it got slightly above. And at this point, even though price is not tapping my 62% where I ideally want to see price get into, I still have to understand that price doesn't have to get up there. And as I do teach, a lot of times, the only time I really want to entertain the ideas of taking shorts at the 50% is if I see price take out liquidity right before it. So in this case, seeing price built up buy sell liquidity, swept it, and then tapped the 50%, I was more inclined of looking for shorts here. Also, too, keep in mind the only order block price has to mitigate is the biggest one. So even on here on the 5 minute time frame, this would be the extreme order block. But I can assume on a higher time frame, maybe the 15-minute time frame, there may be a 15-minute order block right here. So once again, the only order block price has to mitigate is the biggest one, and there is price mitigating the 15-minute rather than the 5 minute here. Also, this would be a great example of sometimes if you guys want to use the breaker block, I would consider this a breaker block setup. Either way, in my opinion, is just a refinement of that higher time frame order block. So however you perceive it, either one will work. But seeing price took out buy sell liquidity, tap the 50%, tap the 15-minute order block, or tap the breaker, I simply went down to the 1 minute time frame to see how price was developing and decided if I wanted to take shorts here. So if you notice on the 1 minute time frame, we have a 1 minute low over here, and we can mark this up as a structure low that led into this structure high right here. And if you notice, price actually broke underneath. At this point, this potentially could be a break of structure. If this is truly a break of structure, I would want to see price come up into premium, and I would want to see price not break above the structure high. And that's exactly what it did. Price came up, tapped into premium, and then gave a bearish engulfing candle here. So I simply took my short position here with the stop loss above here, and then allowed price to run on lower. So that's basically where my entry came into play. We can see how I entered at the end of that closing candle, or so technically my entry was on that candle right there, since I did wait for that candlestick to close, like I said. And then as price dropped on lower, I simply closed my position somewhere in this area. The reason why I closed it in this area was simply due to the fact that one, I on the higher time frame, I was bullish, so I simply was looking at this as a retracement at this point as well. it was already giving me about a 1 2 3 RR, which is usually what I want to shoot for. And also, if you guys do remember, yesterday I was trading oil and I ended up taking a retracement trade that ended up coming back to my break even position. So honestly, I did not want to see price come all the way back up to my break even and not catch any profits. So ultimately, this wasn't a bad play. Took my profits and called it quits here. And if you notice, looking at price now, this was simply a retracement play. So one thing I can point out as well is I could have potentially managed my trade a tad bit better because if you notice, I essentially left all this potential profit on the table. For me personally, there's really no way you can catch every single point in the market or every single pip. So I'm not too discouraged by it. But looking back at it, I definitely could have allowed this to run a tad bit more, of course. But also realistically, if you guys are following my way of managing my trade, usually I move my stop losses or move my stop loss above the M1 highs as price falls on lower. So for example, at one point, my stop loss would have been at break even. Let's go to make this a tad bit thicker so we can see it. My stop loss would have been here at break even, and then once price pulled back and made a new low, my stop loss should realistically be above this M1 high. Because if price is truly in bearish structure, price should not break above this M1 high, right? So price pulls back and makes a new low, and then I could have moved my stop loss above here. Price makes a new low, pulls back, and then makes a new low. So then I should have moved my stop loss maybe a point above here, and then price would have stopped me out. So realistically, even if I did follow the rules, I would have captured a tad bit more profits. But if you notice, I realistically would have only caught, 34 more points, which obviously is more profits. But realistically, it really isn't too far away from my initial exit versus how I could have potentially caught a tad bit more profits, if that makes sense. So ultimately, still a winning trade. Got that 1 to 3. Called it a day. Very short scalp. Could have held a bit more, but realistically, I would have not made that much more. So I think that is basically it. Just keep in mind when you guys are taking these specific setups, for example, a retracement trade, we really don't know how far price wants to retrace. So just be very aware of that. I know yesterday someone in the live said I should have partialed out. And this is partially why I would not partial out. Because if you notice here, once price hit my 1 to 3, I closed the full position. If I would have maybe closed half of it, I believe I had 2 contracts on this specific trade I did. If I would have closed half of it, obviously closing 1 contract, I would have left one. And then I have my stop loss at break even. If you notice, price would have eventually came back and hit my break even anyways about here. So realistically, it was better if I closed the full position rather than partial out because I would have only made half the profits and then allowed the other contract to hit my break even. So I also bring it up because there are many different ways to trade. There are many different ways to manage your trade. Try to find something that works best for you. But I'm just trying to show you guys how I personally did it in this case and how I would do it in the future as well. So hopefully that makes sense. If you guys have any comments, questions, or concerns, please drop them down below. Thank you for watching, and I will catch you in the next one.